Welcome to Organic Crop Insurance 101, hosted by the Organic Agronomy Training Service. This event is being recorded and will be posted online. I am Mallory Krieger, National Program Director with OATS. OATS is a collaboratively managed training program for agricultural professionals working with organic and transitioning farmers in the United States. We seek to grow domestic organic production by strengthening the educational support network of agronomists, certified crop advisors, extension agents, and technical service providers. Our aim is for every transitional and certified organic farmer to have robust access to technical service expertise to provide unbiased, science-based agronomic support for their farming operation. If you would like to keep up to date with the events and happenings at OATS, subscribe to our newsletter, and I'm going to drop the link to our newsletter in the chat. So if you want to subscribe right now, you are geared up to do that. We have some great programs ongoing with many different topics. You can listen in to our monthly Organic Advisor Call series, where we interview farmers and experts, or join in the discussion at our Organic Advisor listserv. We are currently enrolling participants in the Organic Field Crop course, which is a training program for ag professionals who want to better serve organic field crop farmers. Enroll by March 20th to secure your spot in the next class. In addition to today's webinar on organic crop insurance, OATS is also developing a podcast series exploring the ins and outs of crop insurance for organic producers. And we are launching an online video-based course on organic crop insurance topics for ag advisors. I would like to extend many thanks to the USDA Risk Management Agency for providing the funding to develop and host these organic crop insurance education programs. In today's webinar, we will begin with an introduction to the Federal Crop Insurance Program by USDA RMA Organic Specialist Anna Parker, followed by a talk by Organic Crop Insurance Agent Megan Vaith on specific programs available to producers in this region. We will then be joined by Corey Struck from Champaign County, Illinois, who will share his experience with selecting a crop insurance program for his organic farm. We will have time at the end for questions and group discussion. If you have a question during the presentations, please do drop it into the chat and I will be sure that it gets answered. Anna, would you tell us a bit about RMA and the Federal Crop Insurance Program?
Sure. Thanks, Mallory. Like Mallory said, my name is Anna Parker. I am a risk management specialist with the USDA Risk Management Agency. I have been with the agency since 2010, first out of the St. Paul Regional Office, and currently out of the product management office based out of Kansas City, Missouri. I actually work from my organic farm in north central Montana, so I'm pleased to be here. RMA is a USDA agency that, sorry, I need to move something on the screen, that reinsures the federal crop insurance, multi-peril crop insurance. It protects, our programs protect against production loss and for commodities nationwide. Now, 70% of these losses are due to either too much moisture, like in the Midwest, or too little moisture, like in the South and in the West. At least we know drought is everywhere, though, the last couple years. RMA serves as a regulator and a reinsurer. This is very important because we're a quite small agency, just around 400 people nationwide. And the private industry, or what we refer to as AIPs, the insurance providers actually sell and service crop insurance to farmers. Over the last 20 years, we have seen a significant growth in the confidence of the crop insurance program through the Farm Bill. And we've grown from about $30 billion in liability to nearly $200 billion in liability as of today. So what does RMA actually do? Well, we develop the policy, the terms, the procedures, the rates and prices working with with the Farm Bill, with Congress, what they have prescribed for us for the program and the policy, where it is to go and what it should cover. We also work with grower groups. We work with the industry, the AIPs, the insurance companies. And this is an ongoing process. These policies are living and they are changing. So these, for policy and procedures, rates, prices, this is something that's reviewed on an annual basis and continues to grow and change. We also work with new products. There are different types of insurance products coming through all the time. You might be familiar most recently with microfarm. It's just been a couple years, and I know that Megan will speak a lot to whole farm. Microfarm is part of that and is brand new. RMA is also working on the production revenue history program. This is a brand new program and insurance plan coming through RMA. So far focused on human consumption crops that are sold in various that don't go just to the elevator. They're sold through packing houses and farmers markets and UPIC. So we're focusing mostly on soft fruit and sweet corn, peppers, tomatoes. That's where those programs are going. We also have an important role in making sure that the companies are underwriting and servicing the program according to our rules and regulations. So we act as a financial oversight body to all of the insurance companies, and we reinsure the AIPs, the insurance companies. They share in the risk, but we reinsure all of the policies that are sold. And then for their sales and service, we do compensate the insurance companies through a standard reinsurance agreement. And this helps pay for their actual administrative costs, expenses, their underwriting gains and losses. Now to focus on the actual insurance companies themselves. They're who each farmer works with. You work with an agent, and you will most likely work with loss adjusters. They work for the insurance companies that have this reinsurance agreement. Each of the insurance companies can offer the same exact policy. When same exact federal crop, they're working off the same language. But where you will see a difference perhaps is in their customer service and how their sales actually work. They are in charge of selling, working with farmers, issuing the policies, issuing the claims, adjusting the claims, paying the claims. They are also responsible for a certain amount of quality control with the data that they provide and the actual adjustment and underwriting of the policies. They do assume risk. The federal government, USDA reinsures, but the insurance company also has a stake, and they do assume some of this risk in every policy sold. Your agent is your key to back to the program. You will work with your agent through every step of the process. So most importantly, probably in the beginning, you'll make your decisions about what terms and what level of coverage. You'll work with your agent for that. They should help educate some of the nuances of the policy. These policies can be are large. They can be quite complicated. And so we hope that you can work one-on-one with your agent to better understand. They are the face of the program. They are out in the field, and the agent works for themselves, and they could actually write a policy for one or more of the insurance companies. So I think that's kind of an interesting part. They are relatively independent and can write insurance policies for a wide variety of the companies. So what is the farmer's responsibility is, one, work with the agent. And if you are interested in insurance, then it is your responsibility to sign up to buy the policy. When you do this, you have to provide production history of some sort based on the crops that you are insuring. Usually that covers acreage and production. Then of course you go and you do your thing, your initial planting, field prep, planting, weed mitigation, and then report what you've planted back to the agent. This is important. This is what your insurance guarantee is based on, the acres that have been planted for each crop type and practice. Then closer to after late harvest, even after harvest, you will get a bill, and you're responsible for paying the premium on that insurance policy. Now, if there is a loss, it is imperative and very important that the insured or the farmer provides a notice of loss to the agent. That is that you've either noticed or you think there may be a loss out in the field. And then you will work with the adjuster when they come to adjust your claim and finally receive the loss payment. And then the cycle of insurance starts again. So USDA RMA has insured organic crops for a lot of years. I think even, and this infographic shows how the program has grown to match how the number of acres, explosions of acres of organic farming that has happened across the country over the last 10 years. So we have seen that the policy numbers and the acres covered have almost doubled. In that time, the policy has changed a lot as we understand organic risk a bit better. But most importantly, that we've worked with organic farmers and ranchers, organic trade organizations, and to make the policy make sense when it comes to the organic type in practice. So when we get into the minutia of some of the crop insurance policies and procedures, organic is you insure the crop, and if you are employing organic or transitional methods, that falls under a certain type or practice. So we'll always refer to the organic type or practice. And thankfully, we've seen this growing, and we hope this circle continues to get larger as the years go on. And finally, this is just a brief snapshot of what is being grown organically out there, our top 10 largest crops. A lot of the times we see that as for a percentage of conventional to organic, you'll see more of the human consumption crops are grown organic. So when I say that directly, or some of these vegetables, soft fruits, the almonds, the apples, grapes, etc. But corn and soybeans and wheat are still they are in the top 5 of conventional commodities, and they are in the top 5 of organic commodities. That's all I have, so I will now throw it over to Megan. Thank you.
Yes, thank you, Anna. And like they said, my name is Megan Bates.
And I own Northbourne Organic Crop Insurance, which is a crop insurance agency specifically for organic farmers so that they have a resource to go to them. So like Anna talked about in the whole structure of how crop insurance works, I am the agent. I'm the one with the boots on the ground talking with the farmers directly, sometimes ag advisors too, and we're just trying to communicate to make sure the practices that they're recommending are allowable under crop insurance. And then I work with the crop insurance companies, which are like Rain and Hail, Great American, the AIPs, the approved insurance providers. I'm going to apologize right off the beginning. I have a bit of a cold, so you can probably hear it a little bit in my voice, so I apologize for that. But here's kind of a list of what we are planning to talk about today. So first I want to go over how a crop insurance policy works, and then some insurance options that are specific to organic farmers, some recent crop insurance changes that happened over the last couple of years, and then the transitional and organic grower assistance program that is in place for 2023. So first of all, what is crop insurance and how does it work? Crop insurance policy is there to protect a farmer against any sort of natural disaster that could happen on his operation. Most oftentimes, like Anna mentioned, this is a weather-related event, too much moisture or not enough. If you have revenue protection on your policy, it could protect you from a revenue loss as well. But otherwise, kind of out of the whole weather spectrum, we see wildlife and insect infestation are also insurable causes of loss that a crop insurance policy does cover. Crop insurance options are available from 50% to 85% in 5% intervals. So this gives a farmer a multitude of coverage options to select from to determine what kind of guarantee he might need on his operation in order to cover all of his input costs if he were to have a disaster. Premium subsidies vary by level of coverage. So crop insurance is a federally subsidized program. So on the bottom here, you can see the crop insurance subsidy chart as to what coverage level is subsidized at each amount per unit structure. And we're not going to get too far in depth in here, but I would say most farmers fit under either the optional units or the enterprise unit structure. So just for simplicity's sake, we can look at the enterprise unit and go all the way over to 75%, which is a pretty common coverage level. And you can see that it is subsidized at 77%. So this means that the farmer is only paying 23% of the crop insurance premium. Policies are available by crop and by county. So this gives a producer a little bit of flexibility where he can insure one crop and not another if he wants to, or maybe one county and not another. But it also gives him the option to have different coverage levels per crop and county as well. Why is it important to buy crop insurance? Why are we talking about it today? To make sure that everybody knows about it. Realistically, crop insurance is the only input cost on your operation that can actually guarantee you some sort of revenue. So you can plant seed, put down fertilizer, do all the inputs to try to grow a great crop, but a disaster could happen. You could get completely hailed out and have no crop left at harvest. While those input costs won't actually pay you back, crop insurance is there to cover all of those to make sure that you can stay afloat for the coming year. So here's an example of how a crop insurance policy works with how to calculate a guarantee. So on the left here, you can see how we calculate a bushel guarantee. So in this situation, and this is an example on corn, we have an approved yield of 200 bushels per acre. So this means that over the last 10 years, this farmer had an average yield of 200 bushels. Then you take that times the coverage level, which in this scenario, I chose 80% because that's also a very common coverage level, to get a bushel guarantee of 160 bushels. So at harvest time, if this farmer is harvesting less than 160 bushels, he will trigger a loss. On the right, you see how we calculate the revenue guarantee side of it. We take that initial bushel guarantee of 160 bushel and multiply it by the crop insurance price. And this example is using 1172, which was the 2022 spring crop insurance price for corn, to get a guaranteed revenue of $1,875. So the crop insurance guarantee can actually change throughout the year depending on how the harvest price comes in. So the crop insurance prices are calculated 2 times in the year, once in February and once in October. And we'll get into that a little bit more later, but here's an example of how your guarantee could change throughout the year. So on the left, you can see what happens if we have a higher harvest price than the spring projected crop insurance price. So farmers are actually able to get the higher of either the spring or the harvest price. So in this situation, the price went from $11.72 up to $12.80. So this farmer can actually take his original bushel guarantee of 160 bushel multiplied by the harvest price to get an increased guarantee of $2,048 rather than the initial 1,875. On the right, you can see what happens if we have a lower harvest price compared to the spring projected price. So how to calculate this, or the calculation I use anyway, is I take the initial guarantee of that 1,875 and divide it by the new price.
Here I used an example of 1075. This gives us a new bushel guarantee of 174 bushel. So now at harvest time, instead of having to fall below 160 bushels, the farmer only has to fall below 174 to trigger a loss. So this calculation might seem kind of funny. Why does the bushel guarantee go up if the harvest price went down? But realistically, with the price of the commodity being lower, it now takes more bushels to get to that established guarantee that we were currently at. So that was an example of revenue protection. So is revenue protection available on all crops? Not really. Corn and soybeans are available in most areas, but as you go further in depth on more specialized crops, it goes on a county by county basis. So here's an example showing the areas where corn coverage is readily available in the county to get crop insurance on. All the green areas on this map show where crop insurance coverage is easily available. You can just go and you can sign up for crop insurance coverage without having to have history. The white areas on this map are where crop insurance coverage is not available. Now, that's not saying that you can't get crop insurance on those acres, but you might just have to pursue a different avenue in order to achieve that crop insurance. Here's a similar map, but showing the structure for soybeans. So it doesn't cover as much of the United States, but it still covers almost all the counties that actually produce soybeans. Then we get into oats, which covers still a fair amount of the country, but not every county. It's a little bit more specialized. And then you get into sunflowers, which I know is starting to expand a little bit more in the organic world. Here we see that there is just a strip down the middle of the United States where sunflower coverage is readily available. So what options does a farmer have if he was in one of those white areas and crop insurance was not available for him in that county? He has two main options. He can do a written agreement route or whole farm revenue protection. A written agreement is basically a packet of information that you submit to the crop insurance company requesting crop insurance coverage on that crop if it is not insurable in the county. So if you're in one of the white areas, you could submit a written agreement to try to get crop insurance coverage on sunflowers per se. This policy is due by sales closing, which is September 30th for most fall planted crops and March 15th for most spring planted crops. There are some that have different deadlines, but this covers the majority of them. The agent will work with the farmer to prepare the packet and then submit it to the crop insurance company for review, which would be the approved insurance provider like Rain and Hail or NAU Country. I apologize for my cough. This does require some supporting documents, which we'll go over on the next slide. But one thing to note here is that written agreements, in my opinion, are necessary in order to expand the crop insurance program in the future. So when RMA is looking at whether they should make coverage available in more counties, sincerely apologize. One of the main things that they're going to look at is if there were any written agreements submitted for that crop in that county. And if there were no written agreements submitted, it kind of shows that crop insurance coverage isn't necessary in the county. So I like to make note that it could be really useful for farmers in order to help expand the program in the future. It helps. So here are some of the requirements that are necessary for a written agreement. So some of the main ones are the dates that the crop is normally planted. And then you need to list the name, location, and approximate distance to the place of delivery for the crop. If the crop is irrigated, you need to list the main water source and the method of irrigation. And then this is the part that kind of most farmers get hung up on, is that you are required to have some sort of crop history. So the farmer has to verify that he has at least 3 years of history either on the crop that he's requesting or a similar crop. And the farmer can't decide what he thinks is a similar crop. It has to be on the approved list based on the written agreement handbook. And I'll go over some examples in a little bit on what this is. So if a farmer is just starting out and he has an entity, and so he doesn't have any crop history, he can use another farmer's history if that farmer has at least 10% ownership in the operation. Some other requirements are soil maps and then a letter of adaptability from an ag expert, which is typically like a conservation specialist or a certified agronomist. Here's an example for what similar crops might be for canola. So any crop on this list could be considered a similar crop in order to get that 3 years of history. And it does not need to be 3 years of the same crop. So if a farmer has 1 year of history of barley and 2 years of oats, he would still qualify for that 3 years of history in order to submit the written agreement to get coverage for his canola. And then here shows a slide as to what similar crops are available for sunflowers. And these are interchangeable. So if you are trying to get crop insurance coverage on dry peas, you could just replace the two on this chart to show that, like, you could have 3 years of sunflower history in order to obtain coverage on dry beans. Whole farm revenue protection is a whole different type of policy. And I had mentioned earlier that this is kind of the second option in order to get crop insurance on crops that are not readily available if you're in that white area on those maps. This protects the entire overall revenue for the entire operation. So instead of talking about revenue protection, where a lot of it is based on yields, and if you trigger a yield loss, then you start to trigger a claim, this one is all based on revenue. So the guarantee is based on the most 5 recent crop insurance history of Schedule F farm tax returns. And so they look at the allowable revenue on your most previous 5 tax returns, your Schedule F history, and average it together. Then they look at what your expected revenue is going to be for the coming year. They take the lower of those two numbers, and then they multiply it by your selected coverage level in order to get what your guaranteed revenue is for the year. And then if your revenue for that year falls below that guarantee, you start to trigger a claim. Coverage levels for this policy are available from 50% to 75% unless you have 3 or more commodities on your operation. And if you do, then you're also eligible to purchase 80 and 85%. And also with more commodities, you get more of a whole farm subsidy discount on your crop insurance. This is really great for diverse and organic farmers because it covers virtually any crop. Some of the ones that it doesn't cover are timber or livestock for show, sports, and pets. Otherwise, if you have like a turkey operation and you're wanting to insure your turkeys or chickens or whatever it may be, this is an option to get crop insurance on those commodities as well. Some of the downfalls to whole farm revenue protection is it is more paperwork than your standard crop insurance policy. So in order to even look at quotes to see what coverage will look like, you need to submit those 5 years of tax returns to your agent to look at. And then there's more paperwork as the year goes on. RMA has done an excellent job at trying to reduce this paperwork overload to make it less strenuous on both farmers and agents. So things are trending more in the positive. So I wouldn't say that that's a thing to take a step back from, but just be aware that there is more paperwork involved in this. One other downside to whole farm revenue protection is that claims are more delayed on this policy than your standard revenue protection. And that is because everything is based on your Schedule F history. And so typically farmers are used to harvesting their crop in the fall. If they trigger a loss, they call their agent, the agent files a claim, and then the crop insurance company's adjuster comes out, does the appraisal or measures the bushels, whatever needs to happen, and then they pay the claim fairly quickly. Well, on this policy, you won't get paid out until we know what the revenue is on the Schedule F for that year. So instead of getting paid out in the fall, you won't get paid until taxes are filed, which will be the next spring. Contract pricing is an option that is really, really great for organic farmers. And this allows organic farmers to insure their crops at their contracted price instead of the RMA established price. So without using a contract, they look at the conventional daily average closing price for the entire month of February based on the Board of Trade as to what the closing price is. So they average it the entire month of February and come up with what the established price is. Then to account for the organic value, they take that number by a factor. So for 2023, they took that conventional average number on a factor of 1.878 on corn and 2.056 on soybeans to come up with what the organic crop insurance prices were going to be established at. In order to use contract pricing instead to individualize your coverage to what price you are actually getting for your grain, you have to have this special option on your policy by sales closing, which is March 15th, which is right around the corner here, so something to keep in mind. And then you have to submit your contract to your crop insurance agent by acreage reporting, which is oftentimes July 15th. One thing I really suggest organic farmers do is have this policy on their in place, have this option on their policy, just in case they want to use it. If summer comes around and either you don't have a contract in time, or maybe your contract is lower than what the crop insurance price is, you just don't submit it to your agent, and then you are not charged any extra premium just by having it on your policy. So I always suggest have this on your policy in place so that it's available if you want to use it in the future. There are caps on crop contract pricing option. So it's capped at 1.5 times the organic crop insurance price on corn and 1.75 on soybeans. In my history, I would say that there's rarely contracts that go above and beyond these caps, so nothing to worry about, but I just wanted to let everyone know. So here's an example.
There's one timely question in the chat. Eric asked, the CP buy-up is nominal, correct?
Yes.
Thank you.
Yep. So here's an example of how contract pricing can help a farmer when they're calculating their guarantee. So on the left here, you can see that this farmer had an approved yield of, or a guarantee, I guess, of 48 bushels times the spring crop insurance price. And this is an example from last year to get the spring price of $27.41 to get an established guaranteed revenue of $1,315. On the right, you can see that this farmer was able to get a contract in place for $38 a bushel. So instead of using the $27.41, which was the set crop insurance price, he was able to substitute his $38 a bushel contract in that place. This gave him an extra $500 of guarantee on his policy. From the losses that I saw this past year, this made a big difference for farmers in order to collect more on their crop insurance policy, and had a lot more individualized coverage as well by using contract pricing. Beginning farmer rancher isn't anything new, but I just wanted to make sure that everyone was aware of it and kind of how it works. So this allows farmers to receive benefits for 5 years of farming after they turn 18. And your college years can be excluded as well. So if you're coming back to the operation after you're done with college, then you can start your 5 years then. Some of the main benefits on this are waived administrative fees, an extra 10 percentage points of additional subsidy, and then yield adjustment, you get to use 80% of the yield instead of 60%. So yield adjustment is on most farmers' crop insurance policies, and this is in place to help you in a year where you had very poor yields. So like 2012 is kind of a big one when people didn't have a very good yield. And so instead of having like a 0 bushel yield in your 10-year history, you're able to substitute that 0 with 60% of the yield. Beginning farmer ranchers can substitute it with 80% of the yield to give them a little bit of a bump up there. Relay cropping was announced for the first time in 2022, where relay cropped acres on the soybean side could be insured under federal crop insurance. This was allowed on a case-by-case written agreement process, and you did need evidence of practice viability in the region, which is that same thing as the letter of adaptability I talked about earlier from either a certified agronomist or a conservation professional. And depending on the region, you do need some sort of history in order to achieve crop insurance on those acres. So here you can see region 1, we do not need any records in order to get crop insurance on those acres. So you need to submit the written agreement, but you do not need the 3 years of history. Where in that darker blue area, in order to get crop insurance, you have to prove that you have been farming with relay cropping soybeans for 3 years on your operation to achieve that crop insurance coverage. Double cropping crop insurance expanded in 2023 for both soybeans and grain sorghum. So I just kind of wanted to show the maps here.
And so this allows a farmer to raise 2 crops in 1 year and get coverage on both of those crops. So as you can see on the map on the left, that one is for soybeans. The area that is blue, you can get crop insurance coverage available on your double crop soybeans without having to prove any history or submit a written agreement. The green area is where you need to submit a written agreement, but you don't need 3 years of history to verify that you can grow 2 crops in 1 year. And then that yellow area is where you have to submit a written agreement with the 3 years of history showing practice viability in the region.
Megan,
Toga,
your microphone keeps dropping out on occasion. Not sure what's going on,
oh, weird.
but it's back now.
Okay, well, just stop me if I need to repeat anything. Did I lose you?
It's
Just went
going
blank
in
on
and
my
out.
screen.
It's going in and out right now. Go ahead and speak again. Let's see if we
Okay,
can
are
hear
you there, Mallory?
Yes, we can hear you great.
Okay, it went black on my screen for a second too, so I don't know. I guess it wouldn't be a webinar without any technical difficulties, right? Anyways, this is the Transitional and Organic Grower Assistance Program, also known as TOGA, and this is available in 2023 for organic and transitioning producers. And so this just offers some extra premium assistance for these farmers. Transitional organic crops get an extra 10 percentage points of subsidy. So like we referred to earlier, where the farmer was only paying 23% of his premium, under transition, he would only pay 13%. So it cheapens up his premium quite a bit. And then certified organic crops receive an additional $5 per acre premium discount. And then whole farm revenue protection policies receive an additional 10 percentage points of subsidy. This list of crops on the bottom show all the crops that are covered under this TOGA for 2023. And one thing that I would like to draw attention to or make note of is when an agent is running quotes for a farmer and they're certified organic or transitional organic, the quotes are not going to reflect these discounts. They will not be applied until the billing statement. So as farmers are looking at their coverage levels and deciding what coverage elections to make for the year, just keep in mind that your premium will probably be cheaper because of TOGA than what your quotes show. So just something to keep in mind. And that was all I had. Hopefully I didn't cut out too much. And from there, I will hand it over to Corey, and he is going to tell us a little bit about his operation and how he uses crop insurance on his farm. And then we'll go to a Q&A.
Hi, I'm Corey Struck. I'm located at the southeast end of Champaign County, about 20 miles away from Champaign. Last year was my first year of me taking over the operation, and that's 400 acres, all in row crops, so corn and soybeans here. I put all of that into transition because I don't have the equipment or the ability to do multiple management styles. And I know that I wanted to go organic in order to reduce a lot of the problems we're seeing in society within our food system. So my experience with crop insurance is that I am the only transitional organic person I'm pretty sure that my agent is working with. So I got to do a lot of homework and figure out a lot of ins and outs and kind of where to guide them and provide documentation or resources. And basically they were like, yeah, you can read and you understand things like we do. So I did a revenue protection policy, and I used contract pricing is kind of what I did because I already had contracts for non-GMO grains. So that's what I used. How did those policies work? So when you see the drought maps in Illinois, we were the spot that was in D1 drought in Champaign and Vermilion County. That's right where I farm. And this being my first year of transition, my revenue protection policies, I wasn't able to have a yield loss significant enough, even with those two factors. So completely going on to a very low usage nutrient plan and being in drought to trigger my bushel guarantees because I'm a beginning farmer, so county yields and them being so low. So my experience with crop insurance is for a beginning farmer is pretty low, I guess. And that's, I guess, my experience and how my crop insurance did or did not work for me last year. Anything else you need me to cover, Mallory or Megan?
Well, I think that kind of gets us started for the Q&A. Thanks for that introduction as to your experience with crop insurance, kind of where you're coming from. And thank you to Megan and Anna for presentations. We do have a few questions from the participants in the chat currently. Please drop any questions that you have into the chat and I will make sure that they get answered. So the first question was asked by Eric, which Anna answered in the chat, but I want to make sure everybody caught the answer. Was 2023 the first year OC policies were available?
No, and I think it said 2013 because that's what the infographic showed was.
I said the wrong word. Yes, it said 2013.
No, no problem. It wasn't. It was just kind of a handy comparison to show the growth over the last decade. I don't have the exact Farm Bill language memorized, but I believed RMA started covering organic type practices in the early 2000s based on Farm Bill language. I'm sorry, I don't have the exact language or year memorized, but it's been as long as I've been within the agency, and even I think almost as long as I've been with the USDA.
Thank you, Anna. And then this is a question for Megan. Eric had asked, the CP buy-up is nominal, correct? You answered yes, nominal. His follow-up question, 50 cents an acre or so?
Yeah, I should clarify a little bit on that too, is like it depends on the situation, I should say. So like just having contract pricing on your policy isn't going to cost you anything unless you use it. And in the situation I had where it raised the guarantee over $500 per acre, the premium would probably be more than 50 cents. So it really depends on the crops and how much it increases your guarantee. If the like price is only going up $1 or $2, then it could be pretty nominal where it's 50 cents or $1 or $2 on the premium as well. But if you're jumping up where you're getting an extra $500 in guarantee, it will be quite a bit more expensive because every time you get more guarantee, the premium is going to be higher as well. But I will say with that, with all the scenarios I've ran, is if you're in the situation, kind of like the example I showed, it is more cost effective to have like the coverage level you're already at and use the contract pricing than it would be to bump up a coverage level to try to get that guarantee because of the subsidy level there. So every time you increase crop insurance coverage all the way to the top, your subsidy starts to drop off a little bit, where here by using the contract pricing, your subsidy level is set. So it's a good way to get extra coverage without having to increase your coverage level and have a decrease in subsidy. And I would like to mention also on Anna's graphic where it showed the acres from 2013 to 2022 that she had mentioned, like, yeah, there's been a lot more organic acres out there. I think another component of that too is that with input costs and high commodity prices, there's been more and more interest in crop insurance as well. So yes, there are more acres out there, but there's also more people purchasing crop insurance than they have in the past. I know people are starting to get more and more interested in it, which is why we're doing webinars like this and making sure that everybody's aware of it. So I'd say there's kind of two sides of it, which is really great that farmers are more interested in it. Organic crop insurance looks completely different than it did 10 years ago, which makes it a lot more attractive for these farmers.
Thanks, Megan. A question from Sherman. If we have too many consecutive years of crop losses, will we lose crop insurance privileges?
No, I mean, in my experience, you don't they will not kick you out of the crop insurance program, but just keep in mind that your guarantee is based on your 10-year history. So if you have multiple years of losses, your guarantee will be lower, but you would still be eligible to buy crop insurance. Kind of the only way that I've seen that you don't, you're not able to buy crop insurance at all is if you don't pay your premium by the termination date. And I don't know if you have any more to add on that, Anna, but that would be my 2 cents.
The only thing I can think of, which would be a little bit in the weeds, would be prevented planting coverage. If you have prevented planting coverage, or if you claim preventive plant on the same exact acres for 4 years in a row, you could lose that coverage. It's called the 1 in 4 rule. It does kind of get into the weeds, and in the region that we're talking with right now, we don't see that happen. We don't see 4 years of preventive plant losses often. But just a small clarification.
Yeah, very good point, Anna. Thank you.
Another question from Eric. Is there any way to split my organic crops from my conventional crop without going to enterprise coverage?
So like, let's just back up and talk unit structures, I guess, a little bit. Enterprise crop insurance coverage, which has a higher subsidy level than optional units, is where all of the crop contract for that county is averaged together at loss time to see if you trigger a loss or not. So let's just say you have 2 different fields in 2 different sections. If one field got hailed out and the other one didn't, those numbers will be averaged together. And so if the field that did well and didn't get hailed out performs well enough, you could kick yourself out of a loss situation because they'll be averaged together to see if you trigger a loss. Whereas optional units, which is what keeps each section individual, you would collect on that section that you got hailed out on because you would automatically trigger a loss because it stands on its own. When it gets to organics, it gets a little bit tricky, especially with split operations. And so enterprise units right now, you can do enterprise by practice, or enterprise by type, but that only allows like splitting it up per irrigation practice. So between your dry land and your irrigated acres, or like type of crop, but does not consider organic. And so if you're split operation where you have certified organic acres and conventional acres, and you want to do enterprise units to get the cheaper premium, they will all be put together. The only way to separate it out is to have a separate policy for it, which means you need a whole separate entity because you can't have 2 separate policies with the same social security number, or do optional units, which is quite a bit more expensive, but a good way to separate it out per practice, organic practice, or section line. And that was probably way more in the weeds than we wanted to get. But really the only way to split apart like a split production operation is doing separate entities for organic versus conventional, or doing optional, like separate units.
Thanks. This question is from Julia. Megan, what are other avenues to get crops approved in other counties? A lot of folks are growing sunflowers, as you said, throughout the Midwest. How do we send clear messages to RMA aside from written agreements?
Yeah, good question. And maybe this is more of a question for Anna than me. I know some RMA regional offices will look at maybe like university research data, or if farmers have a lot of research data, they can use those. I just know written agreements often help the case quite a bit. And I don't know if you have more to add on that, Anna.
It's definitely something that can be best worked with the local area, working with the regional office. So working, I believe, where we're talking right now would be in the Springfield office. Then, and data of any kind will really help the case. So written agreement is our internal data. So we have that insurance history data and we can see what's been happening. If there is a local commodity group or industry or a cooperative or university data that you can bring in to work with the Springfield office, they in turn can ask for what we would call an expansion of a program in the area.
Corey, I have a question for you. I'm not sure exactly what the geography of your farm is. Do you live in a hail alley, and do you purchase just multi-peril like revenue protection, or do you purchase additional hail insurance on top of it?
No, I did purchase additional hail insurance last year as well.
Okay.
So yes, we're in an area that occasionally gets hail, but when we do, hail insurance pays off. Right, like it's one of those things. So
Yeah, that's great. That's I wanted to mention it too because we didn't talk about hail insurance in this policy because hail insurance doesn't fit really under the federal umbrella. It's more of a private policy. And it's in a way to get extra crop insurance on your acres due to only a cause of loss that could be hail or wind, depending on the type of policy. And so on your standard multi-peril revenue protection policy, the highest you can go is 85%, which still leaves you a 15% deductible. So oftentimes farmers that live in an area where they receive some hail will buy a set dollar amount of hail insurance in order to cover that 15% deductible and make sure that their full operation is covered. So thanks, Corey.
A question for Corey from Julia. What do you think could be done to make crop insurance work better for you as a transitioning producer?
So for me, being the first time farmer as well with no history, that's probably a little bit more difficult. If you're already a producer with a history, being able to carry over their APH or close to their APH instead of resubmitting in T yields when you transition is probably a little bit more realistic, I guess, in my way of thinking, because they already have a background of experience to fall back on where things should be. For your beginning farmer rancher, like that's pretty difficult, but when you you start cutting percentage after percentage after percentage, it makes coming in and being successful during transition and being able to utilize insurance effectively very difficult. So for example, I bought 85% insurance last year because I wanted to be able to cover my bank note. And in order for that coverage to happen, my yield would have had to have been 103 bushel per acre in Champaign County. The T yield for Champaign County is 194. And judging by most people's yields around here, most farms were seeing someplace between 220 and 240. So the amount of insurance I could buy, and sorry, that's conventional because the amount of people harvesting organic acres is almost zero around me. But if you take that's a greater than 50% cut from a farmer's average yield as what it would take to hit an 85 percentage to get any sort of insurance help. So I guess trying to make that correlate more in line with what your people are seeing from being able to back up their revenue would be good.
Awesome, thanks. Another question for Corey. Have you used any advisors for your operation outside of your crop insurance agent, like seed dealers, consultants, agronomists, extension agents, who've worked with you on like helping you with your farm plan and transition? And if so, did you feel like those advisors had any knowledge of organic crop insurance? Like, could they provide you with any assistance?
So yes, talked with I use a couple of agronomists and an extension agent. As far as them having any knowledge of crop insurance, that topic never came up, but I have the feeling that the answer is very, very minimal, right? Because once you become a specialist, your focus narrows and deepens, right? Rather than, a generalist. So maybe the extension agent, which I don't talk to a whole lot, would have been a good person to talk to because their coverage should be a little bit larger, right? Than like an agronomist we want to get you the healthiest plants that you can so that your yield is the best.
Mm-hmm. Have you ever received any advice from advisors that you felt like you needed to cross-check with your crop insurance agent to make sure that if you followed it, it wouldn't affect your eligibility?
No, not from my advisors. Most of it's just things that I knew I wanted to do kind of starting out, like verifying that like if the situation presents itself that like planting green doesn't exclude me, and things like that. But that's not necessary. That's not brought on by my agronomist. That was self-driven.
Awesome. A question for both Anna and Megan. So as I said at the top of the call, oats, our kind of main focus and mission is to help farmers access more technical assistance and advice by training more crop consultants, advisors, et cetera, in organic production. One of the things that we've bumped into a little bit is learning about crop insurance is that there are some practices that can affect insurability, and we want to make sure that advisors are aware of those and aren't inadvertently putting their producers at risk for having claims disallowed because of following advice. So what would you say would be the most important thing that an advisor should know when they are working with organic clients?
I can take this first, Anna. I would say like just the most important thing would be communication. If you're going to suggest a farmer does a new practice, make sure that it's allowable under crop insurance first. I don't think any crop insurance agent would be offended if they received a phone call from an ag advisor just double checking on it. It kind of helps safeguard the process throughout the rest of the growing season, because if you're requesting something and the farmer does it and maybe the agent doesn't know about it, that could come up at loss time and there's potential that they could deny a claim, and that would be a terrible situation to be in. So it's always best to have that communication up front. And another thing I would say is a lot of times when people are talking about organic crop insurance, it's like a yes or a no type of thing, that like, oh no, that practice is not allowed, or whatever it may be. And I should mention that we had talked about written agreements about how you could use them to apply for coverage in counties that didn't have crop insurance coverage available, like specifically on sunflowers we had talked about. There are also a lot of different written agreements that can be submitted. And so you could do it for any sort of practice like interseeding or whatever it may be. So usually the answer on the crop insurance side isn't a hard no. It's a like, maybe we need to go through the process and see if we can get it done for you. So my biggest advice would be to start communication early, make sure everything's on the table before the growing season so that farmer knows what his insurance availability is for the year and that he is for sure covered as the year goes on.
Megan is absolutely 100% correct. I will say from a technical side that you often, interplanting is often not insurable through the basic provisions or the basic policy. And in my area, that's what we would call nurse crops with a forage and a small grain that is often not insurable. If you are pushing the boat with your crop rotation or trying something new, what is very important when it comes to loss time is you're going to hear the phrase good farming practice thrown out. And good farming practice is it's not what is good, on the collective sense, but what is a good farming practice for that individual on that land. And the best thing to have for yourself is if you've worked with extension or a crop consultant or a local expert, that you have some verifiable recommendations from that local ag expert to back up those planting decisions that can help in any loss determination or loss claim. So when it's especially important with organics in certain practices. I think relay cropping the relay cropping rules that have sprung up have helped alleviate some of the confusion in this area. But planting, and some of the organic conferences that I've been to over the last decade or so, and interplanting is becoming more prevalent. That is still typically not an insurable farming practice.
Thanks, Anna. Another question from Julia, and this will be our final question for the webinar because we are at time. For Megan and Anna, Is there a template for written agreements that growers can access to see how to have that conversation with agents? How do they go about having that conversation, and what data or information is needed?
Anna, I don't know if you want to take this.
As far as a template, there are templates when the actual regional office is building an offer or a written agreement through the system, but it all starts with that one-on-one conversation with your agent. They're the expert on what paperwork needs to be done, what information needs to be collected, what you need to sign. That's where Megan is your best friend in this whole situation. And then she's gonna make sure that you make all of the deadlines, that the correct type of written agreement is asked for, and that it's processed in a manner, and that you accept that you have the offer in front of you and can choose to accept it or not. So I would just put a plug in for Megan in all crop insurance agents that they're your best tool in getting a written agreement.
I like that you say that the agent, or me, whatever, is your best friend, because that does bring up the point that it is a lot of communication back and forth to make sure that all the information is there. Is there a template? Not that I'm aware of, but that would be fantastic. Hint, hint, Anna. If we could develop something like that, that'd be very, very useful for both agents and farmers as they're trying to navigate what their options are. Usually it just starts with the phone call as to like, I'm thinking about doing this. What are my options? And then the agent goes and researches it, maybe calls the approved insurance provider, and then they call RMA to try to get verification on it. And then you submit the paperwork process. So a lot of them are due at sales closing, which is coming up pretty quick here at March 15th. So the conversation usually at this point has already been started and going through the processes, because it can be a lengthy discussion as well. One other thing to add on written agreements, which I think is really cool, is that you can submit this application trying to get coverage on the acres, but you're not like bound to that either. So you submit it in, and then they'll look at it, and then they'll come back with an offer. And if you don't like what the crop insurance offer is, you can decline it, and you don't have to take crop insurance on those acres. Where like if you have corn on your crop insurance policy, every acre you plant to corn in the county has to be insured. This kind of gives you a little bit of an option. You can see what they're offering and then decline it if you don't want it.
Can you negotiate at all? Julia does know this was the last question, but I'll let that slip in. Can you negotiate at all?
Anna is shaking her head no. I'll let her take that. That's a no. Unfortunately.
So the offer, it depends what kind of written agreement, but they're going to come back with a yield, usually a rate. And that was the decision based on the actuarial data that was available. And I've never seen a situation where a farmer has been able to negotiate one way or the other. That is just like your standard crop insurance, those rates, those policy terms are published. It's a contract, it's published. Those are the rates and the prices and the T yields that are offered through our actuarial documents. The written agreement is just, you can think of it as an addendum to those published rates. So it works the same way.
Awesome. Thank you all so much. That is all the time we have. Thanks to all of our guests who joined today to view the webinar, and a huge thank you to Corey, Megan, and Anna for being really generous with their knowledge and their expertise. Thank you so much for joining the webinar today. Please complete the survey that I am going to be putting up on your screen before you leave. This helps us report out to RMA that we are meeting the objectives of this program. We will share the webinar recording with you by email once it has processed and is up on our YouTube channel. And do remember to join the the OATS mailing list to get notifications of upcoming organic education programs, including other projects that are a part of this RMA funded project. So thank you all so much for attending. Take a couple of minutes to finish that poll, and I hope that you have a wonderful day.